Welcome to the Greener Way podcast, a show about people, planet, and purpose, and how investors and corporate leaders push forward in a complex world. We're joined by Mamadou-Abou Sarr, President and Chief Executive Officer of V-Square Quantitative Management. Mamadou, I feel like we go way back. We've been having conversations about how ESG, climate, transition risk can all be integrated into index and quantitative strategies for a really long time. But can you introduce yourself and V-Square to our listening audience?
Sure. And Rachel, what I'd like to connect again. I was looking at my notes, and I think we've been having this conversation for the past 10 years at least. And so a good decade and a good vintage of conversation somehow. And so a brief introduction about my background and Rachel and for the audience. So I've been in the market for 20 plus years. And after 20 years, you start counting backwards. So I think we are going the other way around now. But nonetheless, if I were to kind of think about the thread across my career, was my belief that sustainability and finance can find a great intersection. And on my side, my background is on the quant side. So I always felt that quantitative techniques were a great way to understand data and build portfolios. And so I spent many years at a large US asset manager as global head of ESG, as you know, and also spent years in other functions on the trading side and quant side at different shops around the world. And so when I left Big Shop to launch V-Square, my vision was the following. I wanted to build a firm that will be known for two things: research and innovation. And for me, the reason why I wanted to have research at the core is that I felt that sustainability became a byproduct, but was lacking consistency, the thoroughness of research processes. So I was very, fascinated by the fact that we needed to address that by having a hyper focus on research. And the other part is innovation, because ultimately it's such a moving field. And for us to remain relevant in the years to come, we have to innovate. And so that's kind of the motto of V Square: research and innovation.
So how do you actually go about doing that, Mamadou, when it comes to actually constructing the indices that you bring to market? And maybe we can talk about, how you integrate goals like clean energy investment, clean tech, decarbonization trajectories into strategies, and then we'll move on to other ways that this is applied.
So we actually have a multi-asset class approach, Rachel. So we cover public equities, fixed income, listed real assets, and also cash management. And so we have a multi-sector view. I'm not trying to pick the best sectors. My take is that you can find good companies across sectors. But what matters the most is actually what we call the intersection of fundamentals and sustainability metrics. And so when we invest or select a company, the company has to basically meet these two conditions. First of all, is it a good investment at the first place? Is the company has the right solvency? Is the company well managed? Is the company at a great price from a market standpoint? But by the same token, is the company using the capex the right way and capturing opportunities on the green side? So that's basically a bi-dimensional approach that we have at V-Square, with fundamental intersecting sustainability to select stocks within portfolios.
So I want to focus in on something you just mentioned there, Mamadou, this idea of CapEx and specifically green CapEx. For our listening audience, green CapEx is the amount of money that a company is attributing on a forward basis for investment towards decarbonization goals or creating products and services that serve decarbonization goals through its supply chain. This is a really picky question, I find, because it can be difficult to identify what green CapEx looks like. How do you go about doing that part of the research at V-Square?
I think when it comes to green capex, there is always that question around, are the companies transparent enough and providing enough information about the way they use their capital? It's a fair ask, right? But the reality is that there is a lot of sell-side research that is available that you could actually look into that goes above and beyond just the balance sheet information. And so the way we actually assess the green capex on our side and to capture opportunities is twofold.
Hmm.
Obviously, we look into balance sheet of companies, we look at other metrics, but also we have access to a lot of sales side research that give us a sense of how the companies are, putting some forward investment into projects, how they're also avoiding certain projects as well. Because when you see the way the balance sheet, as you kind of go and double click on numbers, you realize that a lot of energy companies are divesting from fossil fuel intensive projects and reinvesting in greener projects.
Mm.
So we use a multi-data point approach, Rachel, to capture that. And
Hmm.
then that allowed us to get a higher confidence level around how companies are pivoting to capture that opportunities on the renewable side.
So, Mamadou, let's talk about this specifically through the lens of one country, Australia.
Yeah.
How prepared or what is the opportunity set available within
Yeah.
Australia to pick up on these big thematics?
Well, Australia for me is an exciting market when it comes to renewables. First of all, you have a diverse range of renewable sources in Australia:
Mm.
solar, wind, hydro, geothermal, bioenergy. And today you already have 2.5 million of households that already have their solar panel on the roof. And if you adjust that by the size of the population, that's already a decent number.
Mm.
And the part that I'm excited about, if you look at the renewable energy, that part of the energy mix, it was accounting for around 21% of the Australian total electricity generation in 2020. 21%. Now, that
Hmm.
number, if I want to take you back to 2010, was only around 6 to 7%, Rachel. So you've seen
Hmm.
a steep growth in terms of the part of renewable into the energy mix. And I think this is a great testimony that you have different mechanisms in Australia that incentivize households, but also investors to use renewable energy or be part of projects within the market.
I always love the statistic. There's, as you say, about 20 million rooftop solar installations here in Australia, and there's about 10 million in the entire state of California. So, on an absolute and a relative basis, Australia has a lot going on when it comes to renewable uptake, don't we?
I agree.
So beyond that, beyond sort of sort of the raw statistics in terms of renewable power, how does that get channeled into individual company decisions, Mamadou? Are there opportunities around either renewable energy providers or energy companies in Australia, the infrastructure space? How does that then further get that broken down?
Yeah, the reality is that the same way you mentioned California has a lot of incentive for renewables.
Mm.
And Australia also has a range of incentive. And I'm not sure that all the investors are aware, or even the audience are fully aware of these opportunities. Well, the first one is that the government set a very ambitious goal
Mm.
to have renewable energy representing at least 50% of the country electricity energy mix on the electricity side by 2030. It's a very ambitious goal, which requires incentive mechanism.
Hmm.
So the first incentive mechanism is actually on the tax side. You do have some tax rebate. You also have some tariffs in and other incentives that are part of the loan interest rate level that are offered to any companies or businesses eager to use renewable energy.
Hmm.
And the second part is the Renewable Energy Target, RET, which
Hmm.
allow the government to actually support projects and also incentivize private and public partnerships, Rachel. So these
Mm.
two mechanisms for me are great levers to be used to be catalysts within your market.
Not to keep spouting statistics, but we recently covered an FS sustainability report by the Clean Energy Investor Group, who did some modeling suggesting that it is entirely possible to decarbonize Australia's national energy market in line with the 1.5-degree target by 2050, with about $500 billion of investment. Which is
Yeah,
it's interesting to have that kind of modeling and research, and they've predicated their modeling on using existing commercial technology, solar,
yeah,
onshore wind, offshore wind, hydro, pumped hydro storage, that sort of all of those available technologies. But it was interesting, and to bring in your point about public-private partnerships,
yeah.
where does the balance lie between private investment, public investment, and making sure that one side isn't crowding out the other?
Yeah, no, that's a fair ask and a fair question. And for me, I wrote an op-ed not too long ago, and my question in my op-ed was renewables. Are we ready for prime time?
Mm.
At last. And that last was part of my question. And it was not a rhetorical question, but I was kind of posing that very important question. If we have these
Mm,
ambitious goals by 2050 or 2030, are we actually ready?
mm,
And kind of raise a couple of flags that are also relevant for Australia.
mm,
The first flag is the capital cost. And the capital cost is still too high for renewables. And therefore, if we want renewable to be a legitimate alternative, we'll need to have a lower barrier to entry or more participants to lower the cost of capital. So that's the number one. Number two is the lack of infrastructure, especially around storage of energy and then the leakage that is an issue when it comes to renewable energy. And this is where a public and private partnership makes sense because on the infrastructure side, government tends to have a longer view as opposed to private companies who are operating quarter to quarter. And for renewable infrastructure, given the cost and the long term need that you have there, this is where by partnering with private companies, the government can have an ability to seize market opportunities, but also support long term infrastructure by providing loans and long term cost structure that can enable infrastructure projects to support renewables. And
mm,
last but not least, for this to work, it has also to become a global market. And I know we're talking about Australia, but a planned field around renewables will actually help the market overall. If you
mm,
harmonize regulation, you're likely to have more entrant coming in and working in local projects. So one example that comes to mind was the work that Tesla did in South Australia
mhm,
on the lithium battery. And then within a period of few months, they were actually able to plug in and then support some high energy output out of the lithium battery produced from South Australia. So that's just
mhm,
one example amongst many, Rachel. But it
mhm,
shows that if you have a playing field and you incentivize other players to come in your market, it
mm.
creates more competition, but also more opportunities by the same token.
I love that you pick up on this idea of readiness, Mamadou, because one of my favorite lines from Hamlet is "The readiness is all." Is there a metric and a quantitative strategy for measuring readiness from your perspective?
It's a tough one, right? Readiness is basically, I would say, both an absolute and a relative measure.
Mm,
Why is it an absolute measure? Being ready in Australia means something different than being ready in place like France or being place like Germany or the
mhm,
US, right? So sometimes the readiness is having the right regulatory framework in place that
mm,
allows you to have a stable market that is operating with the right legislation and the right oversight. That's one
mhm,
way of thinking about readiness. But
mm,
for me, readiness, because I believe in the power of market, is having a free market where the price is reflective of the opportunity set. And that's what we're lacking today. There's still a lack of participants who lower the
mm,
price and a
mm,
lack of usage across the
mm,
board to make it a true alternative. For me, an
mm,
alternative is when you tip over the 50%, just from a statistic number. You need to be above 50% of energy mix that are generated by renewable to think this as a viable alternative. Once we
mm.
get to that magic number, I think we will be in a place where competition will be more intense and the price and opportunity will be more vivid.
Mamadou, we've focused a lot on this interview so far, talking about commercial grade technologies that are available today and how that feeds into an investment strategy. But how about that role of innovation?
Yeah,
How do you assess, R&D that companies are making, or developments in technology that may not
yeah,
be commercial or proven today, but may be an
yeah,
investable thematic or
yeah.
going forward?
This is a prerequisite because for us to get to net zero, most of the technology we are talking about are not yet developed or even not yet discovered.
Mm,
And I think this is where the role of private equity is very critical because a lot of these companies that are early stage or even still in incubation phase will need capital and they will
hmm
need patience as well. And
mm,
it's very hard when you have a sense of urgency to create new technology and in a market demand that is in a way emerging. But I think we need to have this technology being supported, being invested, knowing that not all of them will work. right? It's like in life science, whenever you see this project, you have phase 1 to phase 5 before being able to be commercialized. I think it's going to be the same with renewable and clean tech.
Mm,
It will require investment and a bit of patience, and also a sense that not all the technology that will come out will be the right technologies, and we'll
mm.
probably need a couple of iterations to find the best technology out there.
Mamadou, when you're evaluating all of these different strands that we've been talking about today, are there times where it's more appropriate to invest using a listed equity? Is it more appropriate to use a bond or a fixed income
Yeah,
strategy, or as you say,
yeah,
cash and other strategies? Again, it's interesting to
yeah,
have a multi-asset manager in
yeah.
a conversation on this.
Well, there's opportunities in all asset classes. So fixed
Mm,
income, at least, is easier in a sense that you can tie the use of proceeds to very specific projects,
mm,
right? So if you select a green bond, for example, you know that the proceeds are used to address, climate change, and at least you can tie that with very specific outcome. It's the same with municipal bonds in the US and other type of project bonds that are out there. You could tie the outcome to very specific projects.
mhm,
Now, on the listed side, it becomes more complicated unless you have a company solely focusing on renewables.
mm,
And as you know, some of the early players didn't see the light, and we've seen a lot of failures and bankruptcy in just solar energy, for example, right? And so often what you tend to realize, Rachel, is that the larger conglomerates and large energy companies tend to pivot and use part of their capex into green project and renewables. That's one way to
mhm,
look at it. Or you need to go to smaller capitalization, macro cap, and even non-listed, where you have tremendous opportunities on the private market side. So, to your point, having a multi-asset class approach is paramount to
mhm.
capture opportunities, but you need to have the right due diligence process in place to, in a way, assess these opportunities accordingly.
Excellent. Well, Mamadou, as we come to the close of our time together, I want to ask you one question because it can feel really overwhelming when we're looking at the topic of climate change and climate risk and the negative impacts on our planet and our communities. What makes you hopeful and what makes you excited as you're developing these strategies and doing this research?
Well, what keeps me up at night and give me that smile in the morning is that we haven't tried everything.
Mm,
And I'm a eternal optimistic. That's the way I'm wired. Actually, I'm French living in America, so I have the French pragmatism and the American enthusiasm within my my way of life, right? Which is very weird, but that's the way I operate. So, because we haven't tried everything, I'm
mm.
excited about what we have ahead of us, Rachel.
Well, as an American person who's also lived in France, I can meet you coming from the other direction on that.
Wonderful.
Mamadou-Abou Sarr, V-Square Quantitative Investment Management. Thank you so much for joining us today.
My pleasure. Thanks for having me.
Thanks for listening to the Greener Way podcast. If you liked today's show, remember to rate and review us on your podcast platform and make sure you're subscribed so you don't miss an episode. Any feedback? Contact us on podcast@fssustainability.com.au. I'm Rachel Allen-Backus.
The Greener Way podcast is a product of FS Sustainability, a show about people, the planet, and investing in our collective future. All information in this podcast is for education and entertainment purposes only. The Greener Way podcast gives listeners access to information and educational content provided by discussing numerous financial sustainable options and our featured guests. It is not intended as a substitute for professional, legal, or tax advice. The hosts of The Greener Way are not financial professionals and are not aware of your personal financial circumstances. FS Sustainability operates under an Australian Financial Service License and the exemption made available under the Corporations Act 2001 in respect to any information or advice given. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. For more information, head to the disclaimer page on the FS Sustainability website, fssustainability.com.au.